Hello, everybody. Very much glad to have you here. Good afternoon or good morning, depending on where you're joining from. So today we're here to talk about the future of payments in Africa, and for the next, it'll be for the next hour, hour and a half maximum. So we'll be monitoring the chat. If you have any questions, please do just type it in the chat, and we'll try to answer those. So just some housekeeping. This webinar is presented by Zone and AfriDigest as part of our commitment to advancing understanding of Africa's financial technology landscape and helping founders, investors, and policymakers across the continent and beyond succeed. So my name is Emeka Ejena, and I run AfriDigest, which is a research, consulting, and business media platform that helps institutions succeed in African markets. So I'll be a host today for the webinar, and also joining us is Wiza Jalakazi, Director of African Market Development at Brazilian payments unicorn eBanks. With us also is Marthias Leopoldie, CEO and co-founder at Ivorian B2B payments platform Julia. And also, last but not least, Francis Ogbuka, Vice President of Sales and Business Development at Nigerian blockchain-powered payment platform Zone. So welcome, everyone, and thanks for being here. So just some quick housekeeping in terms of the agenda for the day. We'll start with the reminder that there is no one Africa. Then we'll quickly provide some high-level context about fintech and payments. And then we'll get to the main part of the webinar, which is kind of the three forces that are reshaping payments in Africa. Hybrid transformation, borderless Africa, and inclusive finance. We'll then explore those in detail, section by section, and then we'll conclude. Let's get started. So again, you've probably heard people say that, Africa is not a country, and that's obviously true. And when it comes to payments in particular, it's especially true. So this webinar is ambitious to talk about the future of payments in Africa, but we do so in a very broad sense, right? So it's important to remember that markets have, very different characteristics. And so this chart that you're looking at is a very broad overview. And broadly speaking, Africa's major fintech markets can be classified into these four categories or archetypes, right? So you have your banking bastions like South Africa and Morocco, which are very concentrated banking power, bank-led countries with very low mobile payment penetration. You have your mobile money mavens, probably most famously Kenya with M-Pesa, but also Tanzania, Ghana, Uganda, which are just mobile money, mobile payment-led countries that kind of have lower banking power. Then you have, transformation titans, which is markets like Nigeria and Egypt, where you have robust payment rails, but also a rapidly evolving market with strong fintech influence. And last but not least, you have really markets on the cusp, and you see a lot of this in Francophone Africa, where payments infrastructure is not fully in place, but a lot of intriguing white spaces for newcomers and upstart to play in. So, Wiza, I want to come to you actually here, right? So, in your role right now at eBanks, and also in your previous roles, you've had a lot of exposure to different markets across the continent. Just can you add some real on the ground color here? I know you spent a lot of time in Nigeria, but I believe you're based in South Africa, but you've seen Kenya and some of these other markets. So, just from your view on the ground. Just how do you see the differences?
Absolutely, Emeka, and thanks for having me. I think this is absolutely fair, and it even gets granular in region, right? So, for example, Nigeria is kind of like this hybrid mobile financial service-led ecosystem. But those mobile financial services are built on top of the banking infrastructure. The banking infrastructure is quite sophisticated. You've got the real-time payments through NIBs, but then for example, things like OPay and PalmPay, you use your mobile number as the account number. So we've got this hybrid situation that's going on. Egypt is really still very cash heavy. So Fowry, which is a publicly traded company, is probably the largest fintech out of that region. And they have a really sophisticated full stack financial system that's kind of like M-Pesa, but then you can add your card to it, and then you can also go to agents to cash in and cash out, and it's got support by all of the global merchants like your Spotifys and your Netflixes. There are some other markets moving further south into the east, like Zambia, which have pretty strong penetration on both banks and mobile money, and people have them in for different use cases. And there's still markets like Ethiopia, which are looking like they're shaping up to be very strong mobile money markets over time. But still, the banks have a very strong grasp, especially on the merchant payment side, and fragmentation exists even in country. But it's really hard to paint a single map for the entire continent. Otherwise, all of these would probably be different colors. But these are very, I think, sensible categorizations of key regions that are very relevant on the continent, and the countries surrounding them tend to follow similar formats as well.
Yeah, that's fantastic. I think you a very good point on Zambia, but also Ethiopia, right? So Ethiopia, a very big country in terms of population, and kind of going through that opening liberalization of their market. And, we saw with that kind of, their telco, even M-Pesa's, I think, in that market now as, trying to penetrate it. So very good color. Marthias, I just want to come to you just as the representative on the panel for the Francophone region. All right. So we have it categorized here. Your market, Ivory Coast, Cote d'Ivoire, but we have it categorized with Cameroon and Senegal as, these markets on the cusp. Just so from someone who's actually in that market and building, how do you respond to that? Do you see it as a market on the cusp? What do you see as some of the strengths and some of the potential challenges?
So I think it's a very nice description because you neither have a strong banking infrastructure, or strong mobile money infrastructure in place in those markets. So highlighting that, for example, the banking infrastructure in WAEMU, so West African Francophone, or in the central region, for example, where to go through, it can take up to 72 hours, to give you an example, versus NIPS in Nigeria, where it's instant payment. Markets on the cusp, as you highlight, and it's also important to notice that maybe one of the biggest fintech also in the region is based in all of those three markets. So, namely Wave. Wave, it's a unicorn, not IPO'd yet, but on the verge too, I think, and they have. Raised more than, let's say, 300 million altogether. They just announced recent raises, big rounds, like 100 million for their expansion in Cameroon, etc. And what's interesting, as you said, is that it's a pure player. So they're building a mobile money infrastructure, not having a telco license, which is quite, I think, rare at this scale on the continent.
That's fantastic. It's good context for some of these specific markets, and that's a good kind of segue to what we're talking about next. So, here, if you could see this chart, we're going to start with fintech and then get to payments, right? So today, fintech accounts for over 60% of all VC funding to Africa's startups in recent years, right? So, in one way that we think about fintech at AfriDigest is really about 7 customer-facing verticals, which, if you look at this chart as a house, it's kind of that middle, right? So starting with account management on the left and wealth management on the right? So you have these 7 customer-facing verticals in the middle of this visual. You have 2 underlying infrastructure layers, and with the blockchain crypto being one of those. And then on the top, you have these kind of platforms like neobanks and super apps that really combine multiple fintech and other verticals into a single offering. So what we've tried to highlight here with the colors, in terms of the color purple overlay, is that payments is a core element of fintech in Africa today, right? Really, at that middle customer-facing layer, but certainly at the infrastructure layer, and obviously, payments a big part of neobanks and super apps as well. So that's kind of how we see it. I don't know if there's, anything anyone wants to add. Otherwise, one way to quantify the impact of, that payments as a core component of fintech in Africa is to look at how many dollars go to payments versus other sectors, right? So this is a really a categorization. If you had many fintechs play in many spaces, but if you had to categorize every fintech that raised money, in the first half of last year by a single category, you'd find that about half of them, about half the dollars went to banking, lending, credit startups, and then about another 20% went to payment startups. So that's kind of how it's been for about the last 5 years. Payment startups really, taking about 20 to 25% of the VC funding. So that's a good sense of the importance of payments within the African fintech landscape in terms of where VC dollars, venture capital dollar, investor dollars are going. So now that's a bit of the context. Now we're getting into kind of the main, the main thesis that we're looking at in terms of the future of payments. So we're putting forward that there are three forces that are converging to reshape payments in Africa. There's a hybrid transformation that's going on, and it's interesting that Wiza had mentioned hybrid when he was talking about some of the different markets. So we'll talk about our view of that hybrid transformation. And it's really about multiple collisions that are happening at the same time. So we'll dive into the detail in that. The second major force that is reshaping payments in Africa is kind of this push for, integration, this push for borderless Africa, right? So this push to connect fragmented markets in general is going to have a huge impact for fintech and payments, right? And thirdly, the third force that's converging is really this kind of, use of different technologies and new operating models to drive inclusion at scale. So we call that inclusive finance here. So let's jump into the first of those forces, hybrid transformation. And we say the future of payments, first of all, in Africa as hybrid, right? So what does that mean? As we see it, the ongoing hybrid transformation across Africa is really the result of three forces, the consequence of three collisions: the collision of physical and digital, the collision of consumer fragmentation and integrated infrastructure, and the collision of service providers, right? Obviously, you have different service providers that are very important actors in the payment space: banks, telcos, fintechs, and startups. So first, we'll start with the first collision, the collision of physical and digital. And perhaps the best example of that collision on the continent is mobile money, right? The collision of physical and digital. So for much of mobile money's history, as much as we think and talk about mobile money as being digital, it's been very much physical and cash-based, right? So traditionally, somebody working in an urban area takes cash to a mobile money agent who then converts that to digital money, sends that cash across the country to somebody in a rural area who then visits an agent and converts that back to cash, right? And so just concretely, what does that mean in terms of numbers, right? So here's the data on that. It's really this chart here is showing cash in and cash out have really dominated mobile money flows in Africa. All right. So on the left, we see cash in accounting for 70% of all incoming transaction values to mobile money accounts. And on the left, it's a similar figure, 72, for kind of the value leaving mobile money accounts. Again, mobile money, the point here is really, cash is really the mobile money story today and for much of mobile money's history. But effectively looking forward into the future, we think that story is very much going to change. Right? So right now, we're at the bottom of this ladder of mobile money, this evolution of mobile money, right? So where you have cash in and cash out at the bottom, but then more sophisticated use cases as part of this hybrid transformation, right? So from cash in, cash out at the bottom to, POS cards on top that are cross-border, customized third-party products, merchant payments, and so forth. So one way to make this actually concrete, or a good concrete example example of this is really M-Pesa on the continent, right? So when M-Pesa first started, it was very much about cash in and cash out. But today, if you look at that market, there's many more sophisticated products that are being offered by that platform, right? So if you look at this chart here, you see basically three different layers, right? So a basic layer at the bottom from cash in, cash out to kind of bill payments, intermediate layer, and then a kind of a more advanced layer, right? So the basic layer is the M-Pesa that, we're traditionally used to. But at the middle layer, you have products like M-Shwari, which is a savings and loan product. You have ZD, a money market investing product. Fuliza, an overdraft lending product, so it's very popular, a lot of somewhat controversial as well. But you also have Faraja in that intermediate layer, which is a kind of a BNPL, buy now, pay later product. At the top layer, the advanced layer, you have Lipa na M-Pesa, which is a merchant payments product that allows people to pay directly to merchants, POSs via M-Pesa. You have linked cards. You have this global pay product that's a tie-in with Visa that allows people to pay with the M-Pesa accounts globally. And then you also have a tie-in with PayPal. So this is kind of the evolution of M-Pesa, and we think this is kind of going to be, what we see going forward across the ground. Marthias, I just wanted to come to you to kind of get a sense, if you can, of, what is the mobile money situation in Ivory Coast today?
So it's pretty much as you described in terms of, what the mobile money issuers, so the telcos or the pure players have been pushing. So in terms of telcos, we have different players, but the two giants of, the Francophone region are Orange with Orange Money and MTN with MTN Momo. And as I said previously, we have also the pure player, so Wave, which is an American company, heavily funded, even backed by Sam Altman, Peter Thiel, etc. But maybe just to have a little, I would say, different approach on this chart, for our region, I would say that American payments is in the maybe advanced category in terms of complexity for the telcos, or the mobile money issuers, but it's actually at the bottom of the fundamentals, and especially because it's like a core function of the mobile money industry, where you want to have the people being able to pay for the goods. And one interesting thing I think you've seen also play in other mobile money markets is that if you put the American payments next to the peer-to-peer transfer, you can see that it's actually one with the other is kind of like competing in the informal sector. Because in the informal sector, the difference between a peer-to-peer transfer and American payment is very thin. Are you sending money to buy a good, or are you sending money to pay a friend? And one thing that has been very hard for the mobile money market is to be able to have a business model that works with American payments and peer-to-peer transfer. And I think that's why maybe it's in the advanced category for you on this chart, because it's very difficult if you have a different pricing methods, like if you're having American payments that have a higher pricing than peer-to-peer transfer. In the informal sector, people will choose the peer-to-peer transfer instead of the American payments. And what you see in our markets, and I think also in most of the markets, going back to the slides where you show the share of transaction, types of transaction for mobile money, you see that one of the big focus of the mobile money players is to have the American payment working. Just like, Visa and MasterCard for the scheme had the people pay and not just have an account and make transfer between accounts, but pay at the store, pay American or pay online, basically. So I would say that's the difference. And then compared to the Anglophone, more advanced market like Kenya or Ghana or Ethiopia, the loans, the savings are not very well developed. They're starting microloans, nanoloans, and then linked POS card is also just starting. You have some cards that have been launched this year and last year in Ivory Coast, for example, by the players I've mentioned. So that's the stage.
Yeah, that's fantastic. Could go deeper. I think it's also like bringing up to me like the difference between bill payments and merchant payments. But I think certainly worth a further look and a further conversation. But I think the last point you raised in terms of that evolution, right? Starting to see some of the linked POS cards, the loans and savings products, is just indicative. Over the next decade, we'll start to see more of this, right? So this is kind of the first collision that we think about, that collision of physical and digital. And this is just mobile money is indicative of that. But the second major collision that we think about is that collision between, a fragmentation and integration is a simple way to think about that, right? So on the left of this chart, you kind of see this, 2I, 2C matrix, which is trying to explain some of the, the vectors of fragmentation on the consumer side, right? So you have different institutions that could offer, payment instruments, banks, fintechs, telcos, others, different payments instruments themselves, right? Whether that's cash, vouchers, I think are big in South Africa. Crypto is increasingly big. We've talked about mobile money. Bank transfers are a big thing in Nigeria. And of course, cards, exist on the continent as well. So you have these institutions, you have these instruments. You also have, the different channels, and you have kind of the context. I think what Matthias, you were just kind of talking about, right? Is this payment in the context of peer-to-peer? Is it in-person merchant, online merchant? Is it for government services and so forth and so on? So you have this fragmentation on the consumer side, but increasingly you have, these kind of integration of infrastructure, on a bit of the business side. So Wiza, I want to come to you because I love how you discussed this when we had a phone call, a while back. So I just wanted to get, your view, because it's, you had talked about this, this idea, this important collision of consumer fragmentation coexisting with, infrastructure integration, with NIBs, NIP as an example in Nigeria, and MISA in Egypt.
So let's start with unpacking the fragmentation side of the equation. I think the fragmentation has naturally arisen as a result of the market conditions and market expectations. Different products appeal to different categories of consumer. And given how large some of these countries are, like Nigeria and Egypt are both with populations in the hundreds of millions, for example, you found like a natural layer at which products can be developed for each one. Even South Africa, with circa 60 million people, is a pretty big market, and South Africa has got this economic concept of LSMs. These are economic groupings in South Africa, and you find that people who have lower LSMs, stands for living standard measure. People who are in lower categories of the living standard measure tend to use different financial services than those that are in the higher standards of living standard measures. So that's like the natural point from which all of this is evolving. So you find, for example, in most African countries, banks are definitely there, and African banks are some of the most profitable in the world. They don't tend to focus on lower LSM or lower average revenue customers, because they make a lot of money from their business banking. So if you look at the public reports of some of the major banks in markets like Nigeria, like 80% of their revenue is coming from business banking, not from retail. Similarly, in South Africa, it was kind of the same story before the advent of Capitec. Capitec came about in 2001, I believe, Capitec Bank, and they've grown from being non-existent to now being the largest retail bank, and also being the bank with the highest market cap on the Johannesburg Stock Exchange. So that fragmentation has resulted as a result of that, just the fundamental market realities. And obviously everything else has been built on top of it to address the specific needs of the audience who that specific channel is targeting. So Kenya, very big mobile money market, because the banks weren't able to serve the domestic remittance use case very cheaply. And in order for you to have M-Pesa as a mobile money system working, you have to have agents working, you have to have USSD as a distribution method. Now they've kind of evolved that with the mobile app. which serves some of the higher, more affluent consumers. And this is really like what's at the root of it. The instruments themselves, I don't think they've really evolved too much over time. I think at the end of the day, you have a handful of instruments that are super relevant, and it tends to be either some sort of mobile terminating transaction, which could either be mobile money, but it could also be a bank transfer in the context of Nigeria. Cash, which is still king, despite all of the great work that all of us fintechs are doing. We haven't been able to dethrone the value of cash within our contexts. And then card, which is becoming extremely strong in markets like Nigeria, South Africa. It's the default payment method. Vouchers, I think Fowry in Egypt is a great example of a voucher system that has succeeded. And we see copycats popping up in market, but I don't know if it's going to really achieve the same level of ubiquity that Fowry has. And crypto is obviously very new. I think it's only in South Africa where you can walk into some supermarkets and pay with Bitcoin, etc. But like there's still a lot of work to be done there. I think all of this is to say that the role of infrastructure integrators like NIBS, like Misa, like PayShop here in South Africa, that role is only going to become more significant. And there's a pretty good chance that those infrastructure integrators become the single point of concentration of all of the value that is generated in the market, right? So for example, NIBS in Nigeria, they charge a transaction fee for every transaction that flows through their rail, but there's no alternative because that's the only way that you can integrate all of these massive payment systems that, exist outside of each other. So like, OPay has 50, 60 million customers in Nigeria, but then also like GT Bank has millions of customers in Nigeria, and these two systems don't talk to each other. The type of customer who is a GT Bank premium, private banking customer is not the typical classic customer of an OPay. But these people need to pay and be between each other and be paid between each other. So the infrastructure integrators come in to play this role and to be able to sort of like consolidate that. There's other examples as well, like Kenya, you have PesaLink, which integrates most of the commercial banks and some of the microfinance banks as well. Misa in Egypt, apart from running a card scheme, they're also deploying the InstaPay payment network that does interbank interoperability between Egyptian customers. And the need is limited in some markets where there's like a single dominant player, but like even in Kenya where M-Pesa is very dominant, we're starting to see Airtel gain a significant market share because they've managed to make their system interoperable with M-Pesa merchants. So you can actually send money from your Airtel money to M-Pesa customers and pay M-Pesa merchants, but it's cheaper than using M-Pesa itself in some scenarios. So again, all of this is to illustrate that we know why the fragmentation is there and where it's coming from, and we think that the infrastructure integrators have a very unique opportunity to capture a lot of the value that has been created as a result. And for players like us at eBanks, when we're trying to now bridge the local payments infrastructure with global merchants, we tend to prefer to connect to an infrastructure integrator, because if I have the choice of integrating 10 different APIs versus one API that gives me everything that I'm looking for, then I'd rather go with the one API provider. And I think a lot of the value that has been created by some of the leading startups in Africa, your Paystacks, your Flutterwaves, your Cellulants, etc., has been based on the aggregation of all of these different payment methods that exist because of the fragmentation issue, and being able to provide a single point of integration for merchants. But I think there's still a lot of work to be done in some markets like Malawi, where I'm from. It's not always clear if I can send money from my bank account to a mobile wallet or vice versa. But yeah, the problem exists there as well, and I'm sure there will be some infrastructure integrators that come in to sort of solve for that.
That's fascinating, Wiza. Thank you for that. Really like that kind of the way you frame the opportunity for infrastructure integrators. So the other major collision that we think about is really service providers, right? So this is kind of, your classic, banks versus telcos versus fintechs, and increasingly, other platforms as well, like super apps, or even, the idea that everybody's becoming a fintech, right? So you have this collision of service providers, but collision here doesn't necessarily mean competition, right? So in many cases, that collision is turning into collaboration, it's turning into overlap and convergence. But overall, we think this collision will lead to a new wave of innovation in the decade ahead, right? So here's a concrete example from Nigeria, so it has to do with the WhatsApp banking, right? So WhatsApp banking has been available in Nigeria for a while, but really the offering has been very basic. Right. So it's effectively been USSD menus just ported to WhatsApp. Right. So what you have now as a result of that kind of, service provider collision is you have new players now using the latest technologies to really make the promise of WhatsApp banking a reality. Right. So you have Owo, which is a product of Mono on the left of your screen here, which, you're looking at a screen, which is WhatsApp. Owo allowing you to initiate payments with WhatsApp voice notes, thanks to, natural language processing. Right. And on the right, you have a new startup, Zara, which is using AI and optical, recognition, right, to allow you to initiate payments by taking a picture of a vendor's bank account number, and initiate payments in WhatsApp that way. Right. So these are some innovative ways that we see newcomers, pushing the envelope of what's possible relative to WhatsApp banking. And this is really only scratching the surface of the next wave of innovation that we're going to see as a result of that service, that collision at the service provider layer.
Emeka, if I may here, I think it's important to also highlight that this is not a localized trend. It's not like, hey, this is an Africa-specific thing, in my view. Just a few months ago, Revolut, which is one of the larger digital banks operating in the UK and Europe, they recently announced an eSIM program. So you can see a bidirectional convergence of industries where this is a bank essentially saying, hey, I can be your telco too, and I can issue you an eSIM. Kuda out of Nigeria does travel eSIMs, but I think the really big thing with Revolut doing their eSIM, they're trying to own more of that customer stack. And I think the idea of telcos and banks as distinct things, over time that might start to fade away. And I think similarly you have Nubank in Brazil. I just want to make sure, Nubank in Brazil, they have a travel eSIM service as well. I think it's just a matter of time until they start to offer, they've already done a domestic service called NewCell, right? So you've got like a local bank that has this digital distribution, lots of customers, taking the next natural step in their evolution, which is to own more of the customer value. They're already distributing the service to them via the phone. So it's like, okay, why don't you just pay me for your mobile data as well? So I think it's important to highlight that this is part of a broader global trend. And it's just a matter of time here in Africa, we'll start to see, I think, some of the large financial services offering mobile telephony services, and then also some of the large banks offering telephony services, as has happened with Equitel in Kenya, though they have limited traction.
Fantastic, Wiza. I think, the article you wrote years ago, has been very prescient on that, right? That, I think banks are becoming telcos are becoming banks. So I'll recommend the audience, if you haven't read that yet, to look at that. Kind of goes into a bit of the detail of some of the examples Wiza just mentioned. So, yeah, I mean, absolutely, some of these trends are, global in nature. But, what's interesting, I would say, is, some of the ways it's manifesting in Nigeria, right? Even this slide, not in Nigeria and Africa as a whole, I should say. So even this slide, which is a Nigeria example, is not, WhatsApp is not a thing in the US and many places in the West, right? So the idea of kind of banking through this chat app that is almost a default communications platform on the continent, while the broader theme is true elsewhere. I think some of the specific manifestations take a Africa-specific flavor. So I think just looking at This section, again, we see hybrid transformation as a whole as the first major force reshaping payments in Africa. Right. So it's a consequence of those collisions we talked about, physical and digital integration and fragmentation, and that kind of service provider, convergence, you could say. All right. So ultimately, we say competitive advantage will come from being able to navigate the various collisions, and the winners will be those that embrace, that complexity in the marketplace, but are able to deliver simplicity to their customers. Right. So that's kind of the first major force we see reshaping payments in Africa. The second force is, kind of this force that we introduced, which is a push towards a borderless Africa, right? Concretely, we've seen a push over the years, to connect the continent, right? At a high level, we see it through things like the Africa Continental Free Trade Agreement, right? The AU's single African air and electricity markets. And another example that really made news just this week is really the push for a visa-free Africa, right? For African nationals to visit other African countries without requiring visas. So just this past week, we saw Kenya officially went visa-free for African nationals. If you have an African passport, you no longer need any authorization or to pay any fees to enter Kenya, right? So we think those are just some examples of this push to connect the continent, this push for a borderless continent. And we also think, given the geopolitical landscape we're in, this push is likely to increase, in the next 5 to 10 years, right? So, and that has really implications, various implications for payments, right? So the first one we highlight is really about regulations, right? So one thing to watch for in the coming, years is the rise of cross-border regulatory passporting in general, and fintech license passporting specifically, right? So fintech license passporting, if you're not familiar, it's kind of a regulatory framework that allows fintechs to operate across multiple jurisdictions using a single license, all right? So on the left of your screen, what you have here is the official press release from the Bank of Ghana, talking about how the Africa's first fintech license passport agreement between Ghana and Rwanda, right? It's an MOU, but it's indicative of what's to come, right? So in the near future, if you're licensed as a fintech to operate in Ghana, you can operate in Rwanda without needing to go through the licensing, approval process there, and vice versa, right? So this is the first of it in, on the continent. To Wiza's point, this is common in, in other parts of the world. Or maybe not common is not the word, but it exists in other parts of the world as well. But we see it coming to Africa and having, it's definitely a wave to watch for over the coming years. So the next implication of the ongoing push for a borderless Africa is really more activity by the public sector, right? A notable initiative here is PAPS, the Pan-African Payment and Settlement System, right, which is an initiative of the Africa Export-Import Bank, right? So since its official launch, I think just in 2022, PAPS has enabled real-time cross-border payments across, 17 countries. I think Morocco, if I'm not mistaken, was the last country to have signed that agreement to join PAPS. And it connects 14 national switches and, over 150 commercial banks. So it's really, rapid, just since 2022, what's the progress that's been made there. And it's just, again, indicative of that push, especially with the might, the power of the public sector there. And just on the right of this slide that you're looking at, I think, I forget the timing on this, but not long ago, maybe 2 weeks ago, PAPS just announced, Africa's first domestic, the first domestic Pan-African card scheme, right? So this, again, is another example of this kind of what's in store as this borderless Africa and payments becomes a reality. Wiza, Francis, Marthias, if you have anything to add, feel free to jump in. Don't necessarily wait for me. But if not, that's fine too.
I just wanted to pass a comment on this, and thanks so far, Emeka. This is a really laudable initiative what PAPS has done, what it's seeking to do, because we've all opined for the longest time that Africa as a whole is deeply fragmented. Where you look at it from a financial services point of view, and you look at it from a payments point of view as well. Except for specific regions, maybe if you're going from West Africa to somewhere in East Africa, you would be required to, subscribe to multiple visas, right? Just to travel from Nigeria to Kenya to across many other countries, and it isn't that much different as well when you're, say, a fintech and you're looking to expand into multiple countries, which is why I'm sort of happy with the initiative the Bank of Ghana is working on with this Rwandan counterpart on having a singular license that helps us. When you look at it from the point of view of cross-border payments in particular, so typically when you want to, say, pay a vendor, you're in Nigeria, you want to pay a vendor in Ghana, for instance, what you typically be required to do, or what you would expect, is that your local bank here should be able to facilitate it. I mean, Ghana is just a couple of kilometers, 100 kilometers away from Nigeria, right? But that's not what happens in reality. So essentially, your bank, say Zenith Bank in Nigeria, would need to send your transfer instruction, your payment instruction to its correspondent bank, sitting somewhere in New York or London or somewhere, and who would in turn be required to also notify the correspondent bank of the beneficiary's bank in Ghana, right? So you're moving money from Lagos to Accra, but your money would have to touch somewhere in either New York or London before that can be consummated. Now, what this does is that it sort of puts in more pressure on the central banks of these different countries, right, to sort of source for liquidity, to source for FX liquidity to enable these transactions happen. And when they're not able to do this, then you begin to look at parallel sources of sourcing foreign exchange to be able to settle this transaction. When we say that payments or cross-border transactions in particular are significantly expensive in Africa, these are some of the reasons that attribute to this, right? So perhaps coming on stream and enabling central banks, enabling different banks, and even telcos, within the region, consummate payments. You can initiate the payment, and you can initiate the payments in local currency, and you can have this settled at the corresponding counterparty's currency in other countries. Actually really laudable, and it's something I'll be really happy to see gain significant traction.
Yeah, definitely agree with you, Francis, and it'll take some time for us to really see the benefits of this PAPS card, but the underlying idea, I think, is very powerful. The only other domestic scheme that I think has reached similar scale is Verve in Nigeria. So that's now the leading card scheme by distribution, with almost 80 million cards issued in the market. And they came in after Visa and MasterCard. Interestingly enough, Visa is one of the larger shareholders of InterSwitch, which is the parent company of Verve. But the fact that Verve was able to come into a market where you already have global incumbents, introduce a product, and now become the market leader in the space of a couple of decades or so, I think is a very interesting example, because it means that there were some needs that the global schemes were not able to serve. And this analogy also applies to global payment systems. So I don't expect that somebody like a Visa or a MasterCard would have a top priority to integrate directly into the PAPS system, and to be able to work with their bank partners to hold what are called quote-unquote exotic currencies, right? So things like the Malawi kwacha, the Ugandan shilling, these are not currencies that have a lot of intra-Africa liquidity with each other on the incumbent systems, because like Francis said, if I'm sending money from Malawi to Uganda, that money first has to be converted into US dollars, go through a correspondent bank somewhere in a global financial center like New York, and then get converted back into Ugandan shillings when it arrives. What PAPS is doing is that they're removing those intermediary steps and making African currency pairs tradable directly between each other for the very first time. I think it's very important to recognize that there's a legacy that exists as a result of African countries being former colonies of these global powers. And, a lot of African countries got their independence throughout the 60s and the 70s. South Africa really as early as the 90s, the end of apartheid. So all of the infrastructure that was built was kind of built on the assumption that, like, hey, we need to send whatever we make, we need to send it in dollars. And now you have a continent that's, for the very first time, figuring out how do we trade with each other. And then you throw in the advent of the internet, the advent of mobile device penetration. It's been a pretty big mess. And solutions like this are actually helping to unlock the value. I think that, for example, there's a ton of liquidity between the Ghana cedi and the Nigerian naira. But you don't see that expressed the way that it should be, because some of those transactions are intermediated typically by the US dollar. So I think this is going to lead to local intra-Africa currency markets, and that's going to be something that's very powerful for enabling that cross-border trade.
It's fantastic, Wiza. I mean, would love, it'd be interesting actually to have a deep dive on just that subject, right? So this is, super interesting to me. And I liked what you initially said, right? The, so the timeline for this, like the impact of the PAPS card specifically, isn't immediate, right? But the idea is certainly a powerful one, and it's powerful to look for, right? So that's kind of, sir, I think the overall idea in this section, right? So this idea of a borderless Africa overall is certainly a powerful idea. And just so what does that mean for the payment sector as that becomes more ingrained? It's something to look for. So just I'll move on now. And again, France, I actually want you to come in here, Francis. So, we'll have you back to back a bit. But on this section, I think the third kind of major implication of that push for borderless Africa is, the increased activity, increased initiatives by the private sector. So two things that are really interesting, I would say, are really the rise of stable coins in Africa and the rise of real blockchain use cases on the continent, right? So this is just, this slide is indicative, of some of the examples there. For stablecoins, you have, I'll be very quick. We're running out of time, but companies like Yellow Card are in the off-ramp, on-ramp space, right? Helping people to acquire actual stablecoins directly. You have companies like Jusway that are using stablecoins on the back end to facilitate cross-border transactions. A company like Accrue, which I think is really interesting, actually, it's building a agent network across the continent of USD stable coins, right? So you have this, human network across a continent to kind of push this stable coin idea. So it's really interesting. On the blockchain side, I think in terms of real blockchain use cases, there's probably nothing more exciting than Zone, right? So yeah, Francis, please come in and give us an insider's view.
Yeah, so I did. If you look at it globally, Nigeria currently ranks as the number 2 market when it comes to digital assets activity, right? I think it's second only to India globally. When you begin to look at it, you begin to ask yourself, okay, so digital currencies, this is money, expressed in a different form, and what are the primary use cases driving this sort of activity? The users, consumers currently utilizing it to store value. That's one use case, but typically when you begin to explore, when you take a deeper dive, you see that what's truly driving this is actually how they're intending to move money or how to settle payments, right? Commerce drives payments in a nutshell. So you have a lot of SMEs, you have a lot of multinationals who are operated in Africa, right? And they're looking for payment rails that can enable them to sort of move value that they've created, in money to their base country of operations, or if they want to sort of pay for orders from their suppliers and all of that. This has been a really, truly painful process with Nigeria. And I'm not going to delve into all the reasons for that, but what we are seeing across a lot of African markets, in Nigeria particularly, is the stablecoins have just provided this means that makes this entire process more transparent, more convenient as well, and relatively faster than what you would see. Recently, Circle released this, or rather rolled out a Circle payments network, and I think for me that's one of the most exciting use cases I've seen from a cross-border payments point of view, and how they just begin to solve this liquidity constraints utilizing stablecoins, USDC in particular, essentially targeting markets across the global south and in Africa in particular, markets that don't necessarily have a lot of liquidity, that have exotic currencies and all of that. And this is how stablecoins are typically kind of revolutionizing the space. For us as Zone, what we've done is you can sort of just conceive it or conceptualize it as a regional equivalent of a Ripple or a Circle, but then with a twist. So currently, as we speak, we have built a decentralized payment network that connects all the banks and fintechs, all the major banks and fintechs in Nigeria as a market specifically. And now what we are seeking to achieve is to ensure that these payments can be processed more efficiently on chain, and then, of course, engaging with the regulator to see how these payments can as well be settled on chain. And we believe that this is just sort of going to usher in the roadmap to truly decentralized financial ecosystem, right? We currently provide this for domestic payments, and we're looking to also optimize for this for cross-border payments. So it's going to be somewhat like a regional equivalent of what CPN is today. If you're looking to move currencies from Nigeria, from Nigerian naira to Kenyan shillings, or you're looking to move that to Rwandan francs, you should be able to utilize a financial institution who is connected into this payment hub, and you're on-ramping your local currencies. That's going to be swapped via a zone issued token, and it's going to be settled in the corresponding counterparties' local currency. That's something we're looking to do. And the potential, the possibilities, or should I say the potential of this, is truly enormous. One thing we have found in this journey is that there's a lot of opportunity, particularly in the infrastructure space. Today, if you wanted to access a consumer loan, or if you wanted to pay for a specific service, you practically have an app for everything it is you want to do. But on the flip side, for the financial services provider looking to infrastructure providers they can integrate with, that provides them the services they are looking for at a reasonable cost, and that becomes a very significant issue for a couple of reasons. The barrier to entry, first of all, as an infrastructure provider, is significantly very high. You also have issues relating to interoperability. So how do you go across one market to several other markets to begin to connect with the different payment rails you have in this market and ensure you can facilitate settlements in almost near real time? That becomes an issue as well. So whereas the consumers currently have a variety of choice, they could decide to utilize a Lemfi app or a Flutterwave app or even an OP app to carry out some of the payment use cases they have today. But for the providers, they are sort of restricted in terms of the number of providers that they can integrate to, and this is something Zone is looking to solve for, to see how we can become an ecosystem, not just for financial service providers, but even for infrastructure providers. We demonstrated this as well with our announcement with partnering with NIPS to see how we can provide better efficiency to how POS terminal transactions are aggregated, and we're looking to see how we can even enable this from more of a regional standpoint.
Great. I think what you last said in terms of trying to become, an ecosystem player is particularly important, and it's a kind of basically a good segue as we wrap up the section, right? So if you think about borderless Africa and this push, where borderless Africa is a second major force reshaping payments, right? And you see what that means, the regulations angle, the public sector angle of PAPS, private sector, as you mentioned, with Zone and some of the other players you mentioned, I think the winners ultimately we have here are those that are, thinking about interoperability, thinking ecosystem, thinking cross-platform and collaborative by default, right? So it's one of the reasons kind of Zone is exciting. I think as borderless Africa becomes more of a theme, the winners here will be those that build bridges and not walls, right? So that's kind of the second major force as we look to the, and now we look towards the last section, the last third force that we think shaping the future of payments in Africa, right? And that's really inclusive finance, right? So at a high level, what does that look like? What are we watching here? I think there's three major themes we're watching, right? So one is, more sophisticated tools for medium and small, MSMEs, more smarter credit, I should say, that gives access to a broader pool of people. That's what we're calling contextual credit, and we'll explain what all of these mean. And then the thirdly, kind of community-centered systems that unlock social intelligence. So what does that actually mean, right? So first, in terms of MSMEs, I think MoneyPoint in Nigeria is a good example. I think Wiza had talked about kind of integration. A lot of the players in Africa that have done well in fintech have really been integrating, and he pointed to Flutterwave and Paystack in Nigeria as examples of that. And that's certainly true. And I think initially, at least, the first iterations of those companies was really focused on online payments. And I think what we've seen with MoneyPoint is really a focus on offline, right? And really, again, it's another example of that offline plus online, digital and physical. Right. So MoneyPoint has really done a good job in terms of POSs and getting businesses that are, historically informal to kind of formalize and offer them more sophisticated tools. Right. So very reliable POSs that integrate with, mobile apps, that integrate with business loans, and also integrate with, on the right of the screen here, these kinds of cards for businesses that, you now have formal expense cards for what was previously an informal business. So at a high level, this is just an example of what's exciting over the next decade, right? So inclusion here isn't just saying more MSMEs will, come into play, but inclusion of MSMEs to have the tools that they previously were excluded from, right? So just more sophisticated tools for, vendors of all types. And Marthias, I want to come to you here, if you can hear me, just to get a view. This is a bit of your space in terms of B2B payments and MSME. So just a view of your space of, inclusion and driving inclusion for MSMEs. So how do you respond here? How do you see the space?
Yeah, thanks, Emeka. So I think it goes back to the first graph we saw about peer-to-peer transfer, American payments, etc., where you see that the frontier between a formal business and informal activity and informal business is quite thin in most of the markets. I think if you look at the structure of the economies and the businesses, you would find a pyramid which is much, I would say, not steep, but the shape of the pyramid is you have a lot of single person or less than 3-person company that must make most of the market. And when you look at the studies, I don't know, like Nigeria may have like 50 million plus companies in the country, but out of that, 90+% are single or less than 5 people companies. And it's much different than for other markets that you would see or developed markets. So I think that's interesting because the approach of to payments for this type of businesses is quite close to a consumer product. And this is why you see in most markets, the banks have a lot of trouble reaching those customers because they are not really well suited to reach consumers. If I don't have all the data, but if you just look at our markets, it's quite similar. It's less than 20 to 25% penetration of a bank account for the general population. And when you look at the informal economy, it's kind of like the same thing. So going back to your slide, the success of companies like like Money Points, addressing the SMEs, but I think you can have other examples in other markets. I think Wiza mentioned Fori, for example, even if it's cash-based, they address the Egyptian market for MSMEs also quite well, and it's the same thing. So I would say that's why the banks have a long shot, or need to see how they integrate or collaborate or invest more in technology so that they can reach those customers, because as of today, in most of the markets, it's not led by the banks in terms of revolution, besides the regulatory side, I would say. So they can sponsor, but most of the time you will see other players, telcos in mobile money markets, some few players in other markets. So that's quite interesting in terms of product development. And then maybe in terms of feature stack, as you said, just having payments for a company is not sufficient, because to start a business, you need cash, you need a working capital to invest in your business, have the operations running, etc. So the product needs for a business are much more advanced than for a consumer. So it's kind of like a conundrum, because on the one side, it's very consumer-like in terms of user experience, in terms of go-to-market, etc. But on the other side, those MSMEs require much more complex features, to the extent of, if you can provide them with access to stable coins, they would use it, and they would use it to import stuff, to pay stuff, and even like maybe to receive payments when they export goods, etc. So quite a challenge.
No, thank you for that. Two very important points. The first being kind of the appetite, or my interpretation at least, the appetite of the banks to kind of participate in the segment, right, as opposed to some of the segments they're more familiar with historically. And the second one you refer to as the feature stack, and kind of the the opportunity in new features for this segment, which is exactly what I'm referring to. So I'll be just quick as as I'm looking at the clock here, and just want to be respectful of, everyone's time here. In terms of the second piece we look at relative to inclusive finance is kind of contextual credit, right? Very quickly at a high level, thinking about contextual credit, we'd point to, three things, right? In terms of what makes a lending in the African context kind of smart, kind of contextual. So there's kind of 3 Ds of that. One is data. The second is distribution. The third is dollars, but that's just because it's a D. In reality, that's more standing for, balance sheet access, preferably in local currency, right? Given the FX situation, right? So you have these 3 Ds, and that's kind of that are forming this idea of contextual credit. And, over the next, couple of years, decade, we'll see more of this. There's a company called Move, which is a Nigeria-based company that offers basically lending, to Uber drivers. They partner with Uber. At a point, they were Uber's exclusive vehicle financing partner for entire sub-Saharan Africa. And they're a great example of this idea, right? Their Move is probably the next unicorn company to come from Africa as well. So, I think I only mentioned that to say there's also, as that happens, you probably have more people looking to their model and trying to unpack that, and our view of their model is this idea of contextual credit. So on the data side, Move is now unlocking data that was previously, behind a wall, right? So they basically use Uber driver driving data and create, underwriting based on that, right? So you have this proprietary data that's, untapped, that is now becomes an asset to underwrite against, right? So this kind of idea of smart new forms of data, that create a new context for your business. In terms of distribution, the second D, it's again, they were Uber's partners. So everywhere you have an Uber driver, Uber is taking them to new markets, right? And they have now, partnered with a number of ride-hailing platforms as well. So that's clearly their distribution strategy, not to build it themselves, but to partner with folks that already have built, kind of those assets. In terms of dollars, not much to say there. It's, you can look at Uber's Move's fundraising rather, but a lot of debt, a lot of big players. And so this kind of, marriage of data, distribution, and dollars, drives inclusion because you now have these former Uber drivers who couldn't, afford, to have their own vehicles in the past are now receiving, financing from that, right? So you're unlocking access to finance for new segments of the population thanks to contextual credit, and Move's a great example. The final example we'll kind of highlight here in terms of driving inclusion, inclusive finance, is community-centered systems. And this slide is looking at 3 examples of that in the African context. The first example is relative to community-powered savings, the second community-powered loans, and the third community-powered investing, right? So in terms of community-powered savings, there's an Egyptian company called Money Fellows that is basically, probably the first example on the continent of succeeding at digitizing, the rotational saving systems that are common. South Africa's Stokvels, Nigeria might be Ajo, Tontines in Francophone West Africa. So this kind of system, rotational saving system is common, very informal in the informal economy. But, now you have companies that are recognizing the power of bringing these community-centered systems, digitizing them, bringing them online, and building, business models around them. Money Fellows in Egypt is a good example, and that's community-powered savings that, over the next, 5 to 10 years, we'll likely see more of. In terms of the middle of the slide, community-powered loans, there's a company in Nigeria called Money Africa that has really pioneered what they call I think they call it community banking, but the long and short of it is basically initially they have a new, they've extended their model a bit now, but initially their target audience was mobile money agents, right? So providing financing to mobile money agents for floats and other needs. But effectively, to join their system, you have to join what they call a cluster, right? So they lend money to you, but the only agents they lend money to are those that are in clusters of mobile money agents, and that cluster is responsible for repayment. Right? So you get, so it's not an individual loan now, it's a cluster loan. So this idea of using that social community pressure, social community intelligence, that knowledge to kind of, as an asset for repayment is something that, interesting way for that community powered finance. The bottom of the chart, there's a company, called Borderless, which is, providing infrastructure for community powered investing, targeting the diaspora, right? So I think long and short of it is they're building the infrastructure that allows the diaspora to easily invest in different African assets like real estate, like startups across the continent, right? So you have the same, somebody in the diaspora in Texas can join up with somebody in the UK to invest in real estate in Kenya, right? So it's this idea of, and now you're building these communities of the diaspora and now including them in what's happening on the continent thanks to kind of these new technologies and new models. So overall, I think, new technologies, new operating models are kind of driving more inclusive finance. And we saw that, in terms of MSMEs, in terms of using, contextual credit, in terms of that kind of community powered systems. What does that mean? It means kind of more, what's exciting at least, more capabilities, more features for African MSMEs in terms of feature stack. Now new data that unlocks, possibilities and more access to finance for different segments. And then, of course, social intelligence and local context that is now, able to bring more people into the financial services ecosystem. So the winners here are those, we'll say, that get creative about building and serving target communities, not just customers. All right. So those are a bit of the convergence of the 3 forces shaping, the future of payments in Africa: hybrid transformation, borderless Africa, and inclusive finance. Right. So what's really interesting as these, these three forces converge, what could actually happen is, you have new approaches that actually shape global financial infrastructure, right? So the interesting thing, or one of the interesting things on the continent, is that there's, Africa isn't really constrained by existing legacy systems, at least certainly not to the same degree as other places in the world. So what that means is, you have new approaches that, could come to market relatively more quickly, and that could influence how things develop in other parts of the world. So that's a bit about this. That's really the end of the presentation now. In terms of next steps, what's interesting is if you're interested in more of this, there's on the screen to your left is a QR code. Today, AfriDigest and Zone are now releasing a white paper that's available to download. You can go to that bit.ly link, bit.ly/FOPA 2025, as screen on the screen, or just use your phones to navigate to that QR code that'll pop up the PDF, right? So it's really talking about the future of payments in Africa, hybrid, borderless, and inclusive. And it's not just a recap of what we've talked about here. There's some, new ideas and new examples in the paper that aren't covered here, and vice versa, right? There's some things that are covered in this webinar that are not in the paper. So that's what I would, if you're interested in this in terms of next steps, I would direct you to that. Secondly, I think some folks have asked about the slides. So I'd push you to subscribe to the newsletter. We will push the slides out with some commentary to folks who subscribe, afridigest.com/subscribe. And then the third next step for those who are interested, AfriDigest, we have our intelligence vertical. We're in the media space, but as I introduced initially, we also offer research and consulting and paid webinars. So, thanks to our speakers and thanks to Zone, our next paid webinar, for AfriDigest will be in 3 weeks, covering the Fintech in Africa in the first half of this year. So we're at the end of the session here. I want to look, and I just want to offer the opportunity for folks to ask and answer questions. I think, I see, Marthias, you're answering some of the questions in text, but if there are any other questions or folks want to address questions, on the microphone, feel free to do so now. It's not obligatory. I'll just wait a second or two to see if anyone bites. If not, then thank you all for joining us. Marthias, Francis, Wiza, thank you so much. Really appreciate the time you guys took to do this. I know you all are busy. And thank you all in the audience for bearing with us and the technical issues, but I hope it certainly was insightful. There's, I hope you come away with at least one new perspective or one new, data point, one new insight that you could apply to your daily work.
Yeah, thank you so much for having us, Emeka. I think it was a really, really great in-depth conversation, very granular. Really loved it, and hope to do more of these with several other of your experts in the future as well.
Fantastic. We'll hold you to that, Wiza. Thank you. Have a great day, everybody.
You need to send small Naira next time.
No, you need to send Rand. Take care, guys.